Hello everybody, Brian here for quantlabs.net. Just wanted to go over with you my second attempt at this strategy. Some of the indicators I'm using are very different. I'll try to walk you through it. But right now I just want to show you that we definitely have a hot little trade on right now with the US Japanese yen. Today is Friday, February 16th at 2:02 my time, Eastern Standard Time. So currently what we have here is we have a summary of positions here, three of them, that are at this amount on the P&L live on a demo account using forex. And there's a bunch of things I want to walk you through. First, I'm now using RSI. Okay, there's a lot of things that I'm noticing on RSI, and we'll talk about that in a little bit. You can see here the conditions get pretty tight in here as the trend goes up. We made a little bit of money across this range. It's a 1 minute chart. We're also making money on this level on the rise up. You can see here there are some down bars. Now here's the RSI on those trends. But one other thing I want you to realize is with typical trading, you don't want to overtrade these situations here. So what I've done is in my code I've now put a limit on how many positions my system will take on. I should say number of positions
Market
per
entry
cross
for
pair. So in this case with the US dollar, Japanese yen, or any currency pair, currently I'm only going to take no more than 5. What I find is if I let the system take on more positions than it really needs to, it'll overtrade it. You'll have, for the moment, your positive P&L. And at the same time, what will happen is as those trades come off on the potential upswing, and you got, let's say, 10, 20 of these things on the one cross, these losses can stagger into quick losses. So as a result, as part of, call it risk management or whatever, I'm throttling the positions. This is a very rare opportunity I see to have an upward moment here, but right now I have a Python script running, and what would be happening is it would trigger more orders to come in.
market entry
But
for
you can hear the background of market entry for the Python script saying it wants to put on the trade, but if the RSI is more than 50, it won't take on the trade because here you're going to take on a few more losses from my experience, and I'll just keep these original trades on and locked on, and that's it. And as we ride it up, we should be able to get more profit. If I was to look at the tick data, does definitely tell a better story, but you have seen that here, this P&L real time from the broker can change literally on a micro level, as you can see there, like 30 cents in seconds. So the closing logic or the exit logic may need to be put on the tick event or tick method, not on the bar method. So I'm actually checking these positions on tick data versus minute data. So this is one discovery I have seen where you can see all the number of trades it wants to put on. This JavaScript will prevent that from happening. It won't take on the trade if it's more than 50. And it seems to kind of work. I'm probably missing out on more opportunities, but just with the three positions, it will continue to ride the trend up as it's what it's doing here. We are using ATR, but we're not using a static ATR, meaning if you have a position put on here and the ATR is set for, let's say, 10% on that entry, it will kick out of the trade and you take on a small loss, which I get a lot of. But it's these type of trends you want. So if you put on an ATR on the upside, so like for instance here, there may be a downtrend, or better yet, if I had a position here, entry, and then I put on an ATR of 10% on the upper range, what will happen is it'll kick out the trade, and we wouldn't be getting these uptrends at all. Like, it wouldn't hang on to these uptrend in the trades. So what I do is, in my ATR, I update the ATR based upon the last position as it moves up. So essentially what happens is it moves up in this case here, and if the market does turn and it breaches the lower end of the newly updated ATR, it'll kick out a trade because it figures once you go into a downtrend, it will exit the trade, and you've made a bit of money based around that. But you could clearly see it's sort of working. Now, because it's working, I'm able to take on more profit as the positions hang on the upward trend. But here's the interesting thing on the RSI. As we know, if the RSI is more than 80%, right now there is a huge demand for this pair, the dollar-yen pair, and over time it's gonna start to drop off here. As you can see here, it's already dropped off to 55 as one potential indicator. But the problem is there's so many factors and so many different scenarios. This is just one. This is the ideal situation to have as an example I can show you. You can see here that as the trend rides up, it will continue to make more money as it hangs on in these positions, updates the ATR as hopefully the trend moves up, which it clearly is. All right, so let's take a look at the behind the scenes, because there's more. Another big thing is, if you look at my strategies panel, there's actually two strategy jar files or Java files running. This one's taken the order. This particular QLN order 2B, it's just my naming convention, that takes on the order and just added a new position. Actually, it's added a new. So here we are now taking on the Swiss franc. This is where the market, based upon the pairs, this is another good scenario. Right now, what's happening in the market is when the market goes defensive, as I call it, I noticed that a lot of these quote base pairs, like in this case the Swiss franc and the Japanese yen, are the two most common used where algorithms will do forex trading, but it will use these pairs as a base, just the yen and the Swiss franc, and that purely tells me the market is in defensive mode, and that is just how the system works. Another thing is, when I see a lot of the yen as part of the defensive, I could also see the British pound and other ones. This is usually where the market's gone defensive, at least from Duca's copy, the broker. That's what the market data is telling me. Also with the CHF, the Swiss franc, usually I never make any profit whatsoever. So anything to do with the franc, I'm just never making money, or rarely do. You can see that we do definitely have a monster opportunity here with the yen. My system should kick out of the trades by now, but it's not. But it's part of the debugging process. But you could clearly see here that the franc, the Swiss franc, is money losers, but the yen are clearly the winners in this position right now. Now, as I said, we've gone defensive right now. If the market is taking on risk, I'll usually see, like late day yesterday, I'll typically find the USD or the US dollar in the base quote is usually telling me, and a lot of them, that the market risk is on and the market's on an upswing. So you'll see more USD on that side. So it looks like it closed out some positions. Now I just want to show you here, I'm only subscribed to 4 pairs right now, and my other system on my Windows will do 40. I haven't tried that yet, but I'm just testing it on this Mac laptop with limited memory. So those are big scenarios I want to talk about: the defensive of the market, market on, market off in terms of risk. So yeah, so we'll let this ride. Another thing I'm also noticing is the used margin. Because I'm not applying any stop losses on these positions, I'm only using ATR as my virtual stop loss. The question becomes, on the used margin, does the used margin go up for each trade, each position I take on? Does that margin go up because it's a higher risk for the broker, because they don't know what my stop loss will be because I'm not triggering that on the API level? So that's a question I'd like to know, if margin does go up because the risk goes up higher for the broker. They don't know my stop loss, so that might be a negative if you're not telling your broker the stop loss that you want to use, and you both take profit and your stop loss in your positions via manual trades or automated trades through the API. So it looks like, is it taking on more positions or is it unloading more? Yeah, so it's unloaded. Actually, yeah, it's just unloaded quite a few. Now the other thing I should be doing is logging these positions as they take on, because I can go through the logs and figure out which are the profitable trades or not when they get closed out. That's very helpful. I find that the reports from Duca's copy for this amount of trades can get overwhelming, and it's very hard to determine what's happening on a individual level of each trade. So that is that. Obviously there are positions being put on and off. There's just too many of them to track, and as I said, it's better to log them to see what's going on. Okay, so let's get behind the scenes. All right, so here we have our Redis. Now let me show you something that's very helpful. If I go into my folder here, my home directory, just find it on here. What I've done, and it's more reliable now, is storing all the data. Let me just see here if I have it. Let's see. I know it's in here. Oh, here we go. Okay, so right now, this script right here. Okay, let me just walk you through what's happening. This, like I said, there's two strategies. There's this one, and then there's this one, the first one, which is exporting to multiple CSVs. CSV files, comma subverted values, boom, 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 boom. You can find easily examples of that online through the Duca's copy examples on the API. So we're just dumping multiple CSVs here, and each pair will get its own CSV. So what happens there is that this script, as I said, the Python, is using a variety of indicators. I've shown this in a video with the TA-lib, TA-lib, and what this does, it will use EMAs. I could go into a discussion about that in a minute if you want, which I will, as well as it's calculating the Bollingers, upper, middle, and lower, as well as the RSI. And what it's doing is it's watching each CSV, and there's an event when that file is added or changed or modified. In this case, this one, the GBP USD. When that's changed, it will trigger an event in the script, and what it will do is, using TA-lib, it will then go into each CSV here and calculate, let's say, the last 20, 30, 50 rows in each of these CSVs, uses the TA-lib library to calculate each of these metrics or indicators using the EMA, as I said, RSI and Bollinger. Now, as I said, I have done a lot of experimentation between, actually, this is not an EMA, it's really SMA. The difference between EMA and SMA is quite interesting. When I was using EMA, it's a lot more sensitive, and it's really good for low-level data or low-level time frame, as well as if you're planning to scalp a lot. I am kind of scalping, but nowhere close to to what I had before. Okay, see here, so it's still hung on to those trades. I have no idea overall what each individual position, but just unloaded a series of the Japanese yen ones. Actually, we got some money losers, but again, I won't know until I start logging it. But going back to this, as I said, the EMA, exponential moving average, is very good at being overly sensitive to catch the averages. If you're using them for crosses, you will get more crosses, but again, depending upon what you're using your time frame for, if you're trying to be sub-second, meaning high frequency, EMA can be useful. SMA is more for anything. Let's put it this way: the SMA works better where I get less false positives. It's putting on way too many positions using the EMA, and the SMA seems to slow that down. But I'm still getting quite a lot of positions that were false positives, meaning that there were too many positions being put on that were just money losers. An example of this is this Swiss franc business, where if there's too many positions put on for that pair, and you got nothing but losses, those losses will pile up, and your P&L will be very, very negative, which you don't obviously want, and basically limiting the number of positions per pair help you to minimize that, on top of if you use the ATR on your exit as well, that will help minimize those losses. So you will have minimal losses here, these negative 28, negative 31, so on and so forth. You will never be able to get around that, just due to the fact of a number of things, which would include when you put on a position, regardless, in the early milliseconds, literally you'll have a negative P&L, and that's due to the bid and ask spread from the broker versus your target level. So you'll always have negative, but you want those eventually within a little bit of time to go positive. And if they do go negative all the time, that means they've basically you're just going to be losing money consistently, and you got to look at the probability of your winning and losing. And if you have 75% losing, you will lose
market entry
nothing
for
but all the time, which you don't want. So you're trying to prevent those scenarios from happening. So here we could just see that finally the franc has gone positive. So because it's hanging on to those trades, that's good. Okay, so that's what we're trying to prevent, is having as few. So we have now, so the market now has taken on a bit of a risk, because now you're starting to see the USD in the base here, and you can see, voila, right out of the get-go it was positive. And let's see if we could find, so we have two positions that have gone positive right out of the get-go. That is very rare. So if I look at that pair, let me just see what we got going on here.
market entry for.
So again, the market changes so fast. So you can see here, somewhere in here is the position. So it just took on these positions because there was an uptrend, and I bet you my system caught it, and then now it's probably thinking, oh, it's going to be a consistent uptrend. This Swiss franc should have been dumped by now, if you ask me. Let me just see how many positions we have for the franc. So we have two positions. So we had four positions. Hang on here. Let's see here. We got three positions. So they've all gone, yeah, negative. Boom, boom, boom. Yeah, not too good. Anyways, that comes back to what I was saying before. On the EMAs, they're way too sensitive for this type of trading. EMA is good for really high frequency level, or if you're trading on the sub-second. I find the SMA is good to sort of smooth that over, and remove those potential bad trades. So here we go again. The USD franc has gone sort of positive. It's bouncing around. Let's go back to what we were talking about. So we've got the Bollinger and the RSI. I found an article I posted yesterday. No, maybe I didn't post it. Anyways, what it's saying is that if you have your Bollingers, where there's three parts to a Bollinger, you have your upper, middle, and lower. The middle is basically the average, whereas the price, which will give you the upper or lower, is usually a standard deviation of 2. So if you have your closing price exceed the middle, you can treat that no different than a moving average. But you have to make sure that you're coming out of a bottom, what can be called a bottoming process, and that's where the RSI comes in. So in this script from Python, I'm using the RSI from the TA-lib, but it's not correct. So here in my exit script on my Java, you'll notice here that the RSI is correct. The RSI is correct. It's 66. Don't take on that extra position. Prevents potential bad trades. And if it's less than 50, that means it's coming out of a bottom and you have upward momentum. And that usually is the case, because if you have, as I said earlier, your middle price, your middle of the Bollinger and the closing price crosses it, goes up, and you can confirm that with the RSI if the momentum, the volume is in an underbought, not overbought, but underbought, if that's a word, condition. And usually that seems to be potentially correct from what I'm seeing here. So that's pretty good. Okay, so let's continue our conversation here. So that's what this script does. Okay, and then what that will do is this script, if it meets all the conditions as I mentioned, meaning the SMAs, you just have a simple, fast, and slow-moving SMA, and they cross, you have a buying condition. And the other buying condition I'm also testing right now, which seems to be doing okay, I will say doing okay for now, is when, as I said, with the Bollinger, the middle price, the closing price is higher than the closing price is higher than the middle part of the Bollinger, on top of the RSI is less than 50, because it's a bottoming, it's coming out of a bottom, and it's not in an overbought condition. So there might be some validity to that trading logic. So far so good, but I want to test this more throughout the week, next week. Okay. We have an exception. Let me just see here. Let me just capture where it's RSI. Connection. This might be a threading problem. Okay, let me just see what's going on here. Okay, so this is where the logging in a file is helpful. I can't stress the importance of that, but I've never seen these exceptions. I'll attack these later on. Already is in use. Oh, so we have, looks like potentially some form of multi-threading going on with being challenged with the Redis. Yeah, that's probably what it is. Already in use. So we have conflicts with the Redis. Anyways, I'll address that later. Okay. So let's see what's going on here. Okay, so new bugs, part of the process. So I have to improve that. Anyways, coming back to the RSI, we have talked about that. So this data, those two conditions that meant, again, the SMAs cross, the Bollinger with the closing price breaches the middle, and the RSI is under 50. On top of, I need to stress that I'm long only. Right now, I'm not interested in shorting. That just sort of confuses everything. On top of, there's a higher probability of not making money in shorting, from what I'm seeing. I could be wrong, but for now, long only is what I'm doing. Okay, so we've got that. So when these conditions are all met, typically what will happen is it will then send over a signal to JForex to this script right here, saying, yeah, go ahead and buy. But there's one last check. And that one last check is very, very simple. The RSI needs to be less than 50. You can see here under which chart, this is USD franc. Let's see what's going on. So it's losing money.
Market entry for.
I bet you right now, this, or let me just move 5 minute. Okay, so you can see an overall trend is up, but you can see here just clearly on the RSI how there's been more positive momentum than negative. And that's reflected here, and then it hits all this choppiness. This is what you don't want to have. And right in here, these are all false positive signals. If I look at that here, this is what we're talking about here. And if I even break it down in a tick, you can see here we are hitting a positive momentum. But the 1 minute will smooth a lot of that extra noise out. Let's just see what's going on here on the minute. That's a tough one. This is the hardest type of trading in the world. Personally, I'd rather only trade on, obviously on uptrends, long-term uptrends, momentum-based. As I was telling somebody in my Telegram group, I'm noticing it's tough to say because your entries are based upon momentum, but when you put on the exit, usually becomes mean reverting. So that's a pretty tough one to trade. Okay, so everything's all positive. Hooray, hooray, hooray. Now, if I was logging this as more positions were getting closed out, I guess the question would be the ones that are getting closed out, are they all positive? Now let's talk about the exit. The exit that I'm using is ATR. Now the ATR is very simple. As I said in the ATR, a good example is, okay, so let's say we put on, okay, we have a position here. So we did a close, it's up 4.4 pips. But let's say we had an entry here. I don't think we can find any entries along here. Here's an entry. Here's a money loser. So I guess this one was, as an example, puts on a position, but because the next bar exceeded the ATR on the downside, it closed out the trade to prevent any potential losses. But as you can see here, the momentum came off, did down, did dip, did dip. So it did, I think it did the right thing there by closing out a position. Now in here, there should have been a position put on, but this one got prematurely closed out. But let's say if we put on a position somewhere anywhere along here. So let's say we put on a position here or here, an entry, and we are using ATR. Now, typically ATR can be used no different than stop loss or take profit. On the downside, if your ATR obviously goes down, it'll kick out the trade, minimize the risk. But the problem when you use stop loss, a hard stop loss that you are signaling to the broker, you're basically telling the broker, if I predict the stop loss will go up 10%, in this case, maybe it did go more than 10%, you've lost potential of making profits. So you got kicked out of the trade too early. So the nice thing about the type of ATR I'm using ATR, but what it will do as the price goes up, it will update the price on the ATR for both on the up and down. So if it does go up, the ATR will get updated. If it continues on the next bar go up, it will update that ATR. But because now you have a new updated ATR, and this next bar goes on the downside, and that downside does exceed the newly updated ATR, it'll kick out, it'll exit the trade, which means you're making money because it's riding that profit, and that's what we want. Here is the tough condition right here in this area. As I said, I could switch the model over to start trading on the tick as I had here, and we know we have, well, let's put it this way, the RSI isn't an overbought, but if I was to use another indicator like I don't know, rate of change, or just to see the momentum here, what's happening, I could use that on the tick level. Now, as I watch this, which I do religiously now, to try to understand what's going on, you may go, oh, I could apply this trade or this indicator, but you could clearly see here it was kind of choppy and just dropped off. If that ROC, the rate of change, caught it, it may have exited the trade automatically. But you can see how fast your losses could be in a matter of ticks. And here we come back with a positive P&L in just a matter of a few ticks, like 5 ticks, 6 ticks, we're at 80 cents. So you may need to trade on the tick level. So I'm not sure what that buy. So anyways, overall everything's positive, but it's a difficult thing to measure due to the fact of it's just pure random. But I just want to show you what's been going on. This trade here, the USD yen is doing quite well. This Euro USD is doing pretty good. The franc, rarely to have profit, but it's doing okay. Now let's talk about the reports. Okay, so we'll do the intraday statement. You'll see lots of losses before I started this trading session, but let's just take a look anyways. So overall, as I was saying earlier, you'll see lots of blood on here on these daily moves since I started using this trading account, this demo account. You can see here the risk was on. There was more USD and in the base, and the market flip-flop between defensive and risk on for that day. This one, there's just, if I was to break down the levels of why there's so many losses, that all came back to the SMA was doing that. You do have some overall. So it's today the 14th, which was yesterday, actually 2 days ago. But overall, there's just too many losing trades, and that's what we obviously don't want. So as of today, let's see here. So today's not bad. Actually, we're losing a lot here as well. So yeah, that's from probably early yesterday. But this Euro USD has been doing okay. And the market's going to tell you what to trade as well. But okay, so if I go into intraday statement, or maybe better yet, the position report. Let's see over. Hang on here. These. Okay, so we want as of today. So these are 2 days ago, which we don't want. We don't care about any of this stuff. There's lots of losing trades, but after I applied this new trading logic using these indicators as of earlier today on the 16th, you should. So we are dealing with P&L and commission. Now, overall, let me just see if there's a summary here. Interesting. So we are seeing more winning trades. Commission's fairly low. Okay, so you can see the losses are much more minimal, which is good. The little P&L is good. Some nice ones here with the yen, USD and yen. So it looks like we may have ourselves a setting winning scenarios. Let me just refresh this. This is I'll tell you something, Mac. The Apple software is just getting really bad lately. So we have a situation. The computer's freezing. I'm not seeing any exceptions, so it can't be memory. Wow. Let me just update this report here again. So we want position report. Okay, let's see if this comes up. One last thing I want to mention before I forget is the RSI from TA-lib. You can see here this is useless. I don't rely on this RSI, and I need to stress that depending upon your API or your Python package, in my case the TA-lib, some of them can be used, some of them cannot, depending upon whatever indicator you want. In this case, I don't trust the RSI in TA-lib. It seems useless, but as I've demonstrated in the forex library or API, it seems that the RSI is correct. So be aware of that as well. Okay, so let's see what we got here. Okay, so this is the most up-to-date for today on the 16th. Okay, so we've got quite a few positive, again here. So that's gross P&L. But overall, the losses seem fairly minimal. You know, -5, -9 cents, -14 cents, which is pretty good. The commission stays the same, unless it becomes more of an exotic pair, like using the ruble. I can go up to 4 cents. That's the highest I've seen. But if it's a stable, popular cross pair, which I'm using here, obviously only the popular ones: the euro, USD, the Swiss franc, the yen, so on and so forth. But overall, I'm seeing in US dollars some good profit from this trading logic that I am showing you, and some very few negative losses. But when you look at it, this is something you also statistically should measure. As I said earlier, when you use this combination of USD and the Swiss franc, you need to, what's the probability of actually getting a profitable trade with this pair just on its own? And you can see here all the losses are with that pair, with the Swiss franc. So if I took out, prevent the system from trading the Swiss franc, USD against the Swiss franc, I'd probably be able to take out these losses and have pretty damn close to 100% winning strategy on my hands. But of course, I got to test that more often, and expand the number of instruments that I'm using. Right now, as I said, I'm only using 4 more popular ones, but I can expand it to, as my one system has, is 40. So it's quite interesting. Let's see how our summary is doing. Nice. These are good. These are awesome. And we actually got winning conditions on the Swiss franc. So we're doing all right. That is much better than what it was 2 days ago with all the red. And now we're in green on the P&L side, which is great. So I find that is good to know. And I'm a happy camper as of today. But this could, again, change as time passes. All right, so be aware of all of this stuff. It's quite interesting how this all plays out. But once you start to really get into the knee deep of this, you will understand, as I said, the weird patterns of this USD CHF. We've got some money losers here. All of them are CHF, franc, the Swiss franc. And if I took those out, I'd be up, virtually have no losses. on top of, what else can I tell you? The risk of, as I said, where it's a CHF or Japanese yen, that's saying the market may be going defensive. And once you start seeing the USD in the base of the pair, you start to go, huh, maybe there's more risk now in the market and people are putting on more risk. And that's all dependent maybe as well as what's happening in the stock market as well. So I'd have to understand that better. But moving forward, I had this conversation with somebody last night regarding the Dukas copy. Moving forward, once you start to understand what I just said about the market, you have way more instruments using Dukas copy. Yes, these are CFDs, but I'm going to do an analysis to see if an actual CFD of, let's say, oil, let's say Brent, compared against the future market on that same time frame, and be able to measure if the performance is the same. If it is, you don't have to go out and buy future contracts. You can just use a CFD within Dukas copy and maybe get the same performance with less risk because you don't have to pay up front for the full contract prices. And same with the ETFs as well. And with the ETFs and the indexes, you can base on the sectors as well. And there is definitely major commodities here. So there's a variety of strategies I can use within a Dukas copy account for other types of strategies depending upon the asset class that I want to use. Obviously, I'm using the forex. On top of, rumor has it, I don't know when it'll happen, is that the Dukas copy will be adding on cryptocurrency. I mean, yes, it's only going to add Bitcoin and Ethereum, which are the two most popular. So there'll be some money to be made in that asset class as well, the crypto. And maybe I don't need to kill myself writing a separate cryptocurrency script with all the different exchanges when I could just use the simple one between Bitcoin and Ethereum. And again, if I'm going to get the same behavior as if I'm on a major cryptocurrency exchange as well. So that's pretty well it. But you can see here we've definitely got a hot trade situation of 897. Some losing trades once again. Usually it includes that Swiss franc. Again, this is real time. You can see. Actually, no, that's not true. But that CHF, the Swiss franc, I gotta really watch that because you have a higher probability to lose money using that pair. So there's all different types of analysis you gotta look at. Anyways, over and out. Hopefully this will help you out, and we shall talk to you soon. Later. Hey everybody, Brian here from quantlabs.net. Okay, very important addendum I forgot, I just discovered in this position report from Dukas copy. I got thrown off by a number of open positions and they seem to be profitable, which is not bad, I guess. But then when you look at the closed positions, I should be looking at this. So again, it's the same columns, gross P&L and commission, and then of course the time and date. So let's check out here at the bottom, and it's not as pretty as I would have liked. So if we go to the bottom, you'll see here there's a lot more losing positions. There's quite a few winning, and again they are the Japanese yen, but it's clearly not what I would want. So overall we are losing more than winning. So when you look at the individual profit level of each position, there's nothing to brag about. But overall, it's that tells me is that let me just go through it. But you can see there's just as probably starting from about this point, let's say it's about even of winners versus losers. Again, I'm not going to get into the math of it and totaling it all. I mean, I could, but overall, when you look at the, let me just refresh this. So the current open positions that we have on is we have winners. Okay, these are the open positions, which they're all, majority of them look like they're winning. So that says the entries look okay, but it's the ATR is just, and the exit's not working as it should. So that's what I got to work on. Okay, so don't ever look at the overall statement here, because that's the overall of what's doing it, which looks good. But when you look at all these situations, they get closed out. They're losers. So do understand that. Okay, so just wanted to put that out there as well. Okay, later.